Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today, I want to discuss Square. They had a really great day on Monday. They were up about 10%. Actually, let me check. 10.16% was the one-day gain for Square, which is really great because when we look at context, I think context is always important when we talk about history and when we talk about the stock market. I always tell you guys that in an entire year, the stock market as a whole will get you 7 to 10% on average. Square did that in a day. Now, I'm really excited as an investor because one, I own it, but two, I said at the end of December 2020 that I put Square as number one as my big time stock, the stock that I thought was going to outperform the rest. Now, at some point, we need to do a video and see, was that actually true? Because I know Google is doing well. A lot of the companies I do own are doing pretty well. O'Reilly's, surprisingly, is doing pretty well too. So there's that. But I haven't actually sat down and compared from the beginning of this year to now which one is performing the best. So if y'all want to know, put that in the comments. That will remind me to record that video. But today is about Square, and the reason why Square was up on Monday was because they bought Afterpay. Now, Afterpay is a company that can help you to pay after. Now, they bought it for $29 billion. The way that Afterpay works is essentially, if you haven't done it already, this is kind of the buy now, pay later frenzy that people are doing. So you've got Klarna, Klarna, I believe. You know I'm not the greatest spelling, but the greatest spelling. Or English, apparently. But Klarna is out there. You've got PayPal, which is obviously Square's big competitor. But this buy now, pay later movement is pretty much allowing you to make 4 payments, depending on how big the purchase is. But say, look, you got something for $1,000. You got the money. But why spend $1,000 up front? You can break it into 4 payments of $250 and just spread it out and do whatever it is you want to do with your money in the meantime. Now, I was going to say Klarna. Now, Afterpay makes money not from the actual person. So if I am paying later, I'm technically not. They're not making money off of me, assuming that I make those payments on time. They're making money from late fees. So if I'm late, yes, they will make money off that, but they make money off of merchant fees, similar to Visa and a lot of other companies. So from a consumer perspective, assuming that you do have the money, it's actually not harmful for you. You just got to make those payments and break it up, which could make it a little easier, more affordable for you, which I think generally, keyword generally, is a good thing. The other cool thing as to what they're looking to do, or what they may be looking to do, is allowing you to integrate this with Cash App and make those payments that way, which makes it pretty interesting. So I do love the fact that they're kind of creating this ecosystem for business owners as well as consumers, and it ties together pretty nicely. So again, $29 billion, that's what they're doing. That's one reason why the stock was up so much on Monday. But there's another point too, because they announced their earnings, and they had a big shift, which I did expect, but I didn't know it was this big. So, for example, right here, this is from the Motley Fool. They announced their earnings, gross profit margin. That's the money that they're bringing in, right? And this is before bill, so gross profit. So from their seller platform, those are like the little kiosks, and you go to your favorite coffee shop, and they have the little Square app with the little tablet and all that kind of stuff. That surged 85% from the seller platform, and 94% they made from Cash App. That's the amount that they're making there. So they saw some huge growth there, which is $585 million and $546 million respectively. So you got $500 million, a little bit more than $500 million from the seller platform and the Cash App platform. Flat out. Okay, so that's pretty good. So that helps Square's net income. Net income is the money they make after you take out all the bills. So basically, think of that as your gross pay and then your net pay. That's what that is. So Square's net income was $204 million, which is a great improvement because they were negative $11 million from the year ago quarter. So this time last year, or the quarter ago, but this time last year they were actually negative $11 million, and now they're up 204, and that is very, very good because Square isn't like a lot of these companies where you see a huge boom and they just kind of disappear, at least in my view, because once you're on Cash App and you're using it, you're usually going to continue to use it. Once your business uses it, you're going to continue using it because they have an ecosystem very similar to Apple, but for money, where you use this one thing and then you have to use the next one and next one and next one, and you're kind of trapped in a good way, hopefully, in that ecosystem. And I think they're very, very good at creating that. Another thing that I mentioned this back when I bought it, they bought the Credit Karma arm for taxes, which again, if you're a business owner, remember they're really serving businesses, they're serving consumers too, but more so businesses. If I am taking payments and I can file my taxes and I can pay my employees, maybe using some of the things that the Cash App. I guess you could pay your employees with Cash App. I guess. I don't know if that's the best thing for you to do. But they have payment systems and things through the seller platform for businesses. So I think it's a really interesting move that they're making. I think it's a good move that they're making. One of the reasons that I am very excited as an investor, and that I might have to move Square to my long-term portfolio. Been wanting to do it for a while. I'll probably wait until December. That means I've had it for an entire year. I might shift it to my long term and just, stick it up there with the Apples and the Amazon stuff I ain't selling no time soon. Now, the questions you might be thinking is, well, now that I've seen this, is this a good time for me to invest? I think that depends on what your goals are. I already did a video on, when you should sell and how you should kind of figure that out. So you want to figure out what your goals are right now. If you want to have Square as a long-term stock, do your research and make a decision. Now, I think that if you're going to do it, I think you could say this for almost any stock, but I think if you're looking for something long-term, I think Square is a good one. You put your money in, you don't touch it for a year, or you continue putting money in for an entire year, I tend to think you're going to be better off. Now, if you're trying to make some money right now, and you're saying, look, I ain't worried about the next year, I'm worried about the next 8 weeks, I don't know if I would touch Square, because a lot of times, and maybe depending on when this video comes out, a lot of times you see a 10% spike in a stock, and people try to jump in it after, and it's too late. Okay, you got other people who have got that 10% spike and said, look, that's my goal, I'm hopping out, and the stock will drop a little bit. I'm not saying this here to drop 10% or whatever. By the time you watching this, I don't know. And personally, for me, I don't care, because on Friday, I'm gonna buy anyway. Okay, so it don't make me no difference. So again, it's gonna depend on your goal. So because we don't know what's going to happen, I don't think it makes sense for you to wait and say, well, I'm going to wait until it drops to X% or it's going to drop to whatever price level, because it might not drop that far. We don't know. So if you're long term, you just DCA, stay away. If you're trying to trade this particular company, I don't know. I would feel a little more hesitant about that. Doesn't mean you can't. It just means that it's going to be a little harder in my view. Sometimes there are companies where I think there is a straight up upward trajectory, and I say go ahead and go for it. This one, not necessarily. The reason why I say that, and I'll pull up a chart here. You guys won't be able to see it, but you'll kind of be able to look at it. It's kind of trading what we call sideways, which means that it's kind of just bouncing between these two levels, and it's just kind of going flat. And it's been doing that since about, is it really December? No, it's been doing that since about February. About February 15th, it's as high as $283, and today it's at $272. So it's a little down from February. But from February to now, from the time that we're recording this video on Monday, August 2nd, because y'all know my dates be off, it just kind of bounced between 283 down to about the right under 220 and back up to 272, and just kind of been bouncing between there. So it's relatively sideways. So if I'm trading this, I don't know if I would do that, because I just don't know what way it's going to bounce, or is it going to what we call breakout, which says it's at 272. I'm looking at it, it's probably going to fall, but then it just takes off because of what the news that we have today. Don't know. That's why trading is hard. That's why long-term investing is usually better. So just to throw that out there. But long-term, I think it makes sense. I would continue to buy. I am going to continue to buy, because this is all good news. Also, I think that, I'm sorry, I take that back. There was a headline out the other day, didn't get a chance to read it yet, but it was one guy that came out and said that they feel that Square is the next JP Morgan, which is really good. But the reason why I pointed that out is because their quarterly revenue is just $204 million, which to me is not a lot. You've got tons of companies in this space that are pulling in, billions of dollars every single quarter. 204 is low. The fact that they were negative last year is low. That says, oh, y'all got plenty of space to grow. And maybe you will be the next JP Morgan at some point. So those are just my thoughts on Square, why the company was up, what I think its future is going to hold. Again, I like it. Clearly, I like it. I own it. I think it makes sense for long term. You go in weekly, monthly, whatever it is you want to do. I don't think it makes a whole bunch of sense to be trading it unless you have a really tailored strategy just based on what I'm looking at right now. So those are my thoughts. Let me know what you think about Square in the comments below. One last thing, I'm sorry for just adding stuff and making this video longer than what it should be. Comparatively, year to date, January to now, which is the 2nd of August, doesn't mean this video is going to be out on the 2nd of August. I did a video, you can go back and watch this, PayPal versus Square. Right now, Square is up 25% compared to PayPal at 17%. Both are good. I do like both. My son has PayPal, I have Square. And I'm comparing right now to the S&P 500. S&P 500 is up 16%. So, you know, right now Square is a runner. The year ain't over yet, so we'll see. All right, so that is it for me. Talk to you guys later. And I don't want to say last thing one more time, but make sure you click the link below. I'll share with you guys my free course. Most of y'all have at least seen it, but you do want to take it. It's how to create your 6-figure investing plan, totally free. Shows you how I've created that first 6 figures and how I'm continuing to build that, as well as some cool techniques for you as an investor. All free, all in the comment section or really the description below. And hit the subscribe button, y'all. Go on and do that. That's free too. All right, talk to you guys later. Bye.